All right, guys. There's a lot to give over tonight, so I figured I would do a video here. I'm gonna jump into the data in a second, but I do share many of your frustrations that you guys have had with GME recently, especially when this move where, man, I really thought that was gonna break the monthly trigger and start, exploding to the upside. Even the market, you guys look from Thursday, the 29th, June 23rd. And we pull up SPY for a second from Thursday on June 29th. You guys can see that um, it's even the market has pushed way higher to the upside. I mean, we're talking about a $15 move on SPY from where GME essentially topped. Um, I don't, a second. Let me head back here. Yeah, Thursday on the 29th. So if we look at SPY Thursday on the 29th. I mean, it's the market pushed way higher, and GME has just been in a downtrend, and I don't. This is getting really frustrating to track this stock. I mean, this looked like one of the best opportunities I've ever seen for GME to finally get that break and that explosion over the monthly trigger, but you guys know how it is. This stock is one of the hardest stocks that I've ever tracked in my entire life. Probably the hardest stock. And we could do our best, but at the end of the day, uh, always have to keep your mind open that this may very well be a manipulated security, and not always can we know direction for certain. The good part is that we do have one key metric that has worked for the past 2 years flawlessly, and that's whenever we see a large influx of sold puts near a potential bottom, that usually leads to very explosive movement. Like right here, for example, on this day, there was sold puts on Monday, and then Tuesday to Thursday, we had this really nice price action. Over here, again, sold puts the day after earnings, rocketed higher. And over here, there was also sold puts, and so were there by every other bottom. I guess my main point of what I'm trying to say is that regardless with the data, with the triggers, with LDPM, with everything that we use, it's really pointless. I mean, it's not pointless, but the risk to reward isn't there to play calls on this specific stock. I don't think personally for myself, unless we see that massive amounts of sold puts. I mean, while SPY was running from June 29th until now, there was many other tickers that had phenomenal moves to the upside that we were able to play with options and make money off of selling for profit, while GME didn't really have much action at all. So that's what I would say. If you find yourself losing money with options in GME, don't consider yourself a bad trader. You're playing a really hard stock, and you may have a lot more success in other stocks. But regardless, let's jump into the data here. Unfortunately, uh, this I taught this in the first and the second bootcamp lessons. This is not a bullish VOX pattern. So while VOX and VOX trend is in this inhibition zone, which is above this upper black line, price is expected to rise until VOX comes back in to the stability zone, and then price is expected to give back its gains. And VOX came back into the stability zone, but popped right out a couple of times. But now VOX trend, which is the moving average of VOX, has started to break into stability. This doesn't bode well. Can VOX still explode to the upside? Yes, but judging by a day-to-day basis, this isn't looking super bullish to me. So I would just give a couple of examples in the past where this happened with GME. So we can see here where VOX trend cracks into stability and price suffers some significant downside. And then we can see here VOX trend cracks into stability and price suffers significant downside. So those were the only recent examples. I could probably check, just do this for you guys. We'll go for the past 2 years to do some more digging. I mean, the point that I'm trying to bring here is that this is no bias, this is no emotion, this is just simply looking at the VOX cycles and the VOX patterns that GME has shown, and just trying to see if we can predict future price movements doing so. So if we go all the way back to 2021, so here's VOX trend. We can see VOX trend crack into stability right there. As you guys can see, downside follows. We can see VOX trend crack into stability here, downside follows. We can see VOX trend crack into stability here, downside follows. So this is a pretty, significant pattern that has played out many times. Now, once, if VOX can reset at the propagation zone, assuming this is correct and assuming price is about to slide a bit, if VOX can correct back into, the propagation zone and then start moving up from there, that'll be the sign of the next bull run, just like VOX corrected here from the inhibition zone, came back down to the propagation zone and started turning, which sent price moving to the upside. Same thing here. VOX came down into propagation zone and then it started turning, and that was the precursor to the upside that followed, and so too here, and so too here, etc., etc. So, I think worst case scenario, what we're probably looking at, worst case scenario is that VOX continues to fall to the propagation zone, price will probably take a hit, and eventually we can see VOX move into the propagation zone and reset and move back up. Now, again, could this be wrong? Could GME still explode to the upside? Of course. I mean, anything's possible. I'm just trying to give you guys a completely unbiased look of what the data itself is telling us. And the data itself, based on, if you want to go even a little further back, no problem doing that. You can really see that just every time VOX trend cracked into stability, there was some pretty significant downside that followed until VOX was able to reset in the propagation zone, bounce, and then price can move back to the upside. Almost in every single circumstance. So here as well, VOX trend moves down, VOX resets in the propagation zone, and that's what usually leads to a good buy. So I think that's the worst case scenario. The best case scenario would be if VOX can just, reach back out of the stability zone and push back up, back into the inhibition zone, and then we could probably expect further price movements. I've seen it before where VOX trend cracks into stability, but then VOX makes a sharp move higher and can bring VOX trend out of stability and back into inhibition. Like, that's possible. In fact, I've seen it with SPY recently, I believe. Let's just double check on that. Don't want to give any false misinformation. Yeah, so here, it was right here, where VOX trend cracked into stability, but then VOX itself reset in the propagation zone and pushed back higher, turning VOX trend right back into the inhibition zone, which led to that further price movement. So is that a possibility? Yes, but just giving you guys the way I see it right now. As painful as it may sound. I mean, I have a lot of shares myself. I'm not too excited for downside, but there are ways to hedge long positions. There's ways to hedge by selling covered calls. There's ways to hedge by buying puts. None of these things is going to drive price down. I don't know what you read on Reddit, etc. But these are, as an investor in the market, when you have a long position and the data or your indicators or macro dynamics tell you that your investment is about to go down, successful investors, even if they're retail investors, hedge their positions so that their portfolios don't go down more than they have to, especially if they have an inkling that downside is coming. And if they hedge and they're wrong, then maybe they'll lose their hedge, but at least their positions will be going up, canceling out their hedge, losing money. I will say this, let's go back to here because it's a little cleaner in my eyes. The heat map is still, an unstable heat map. Purchasing support above and selling pressure below is unstable, and usually with GME, when the heat map looks like this, price goes down. But the one thing that maybe can give a glimmer of hope is that the fact of the matter is that the snap graphs are still bullish. So I'm not sure what the snap graphs are seeing here, honestly, because the way I'm interpreting this VOX does not seem to be bullish to me, but the snap graphs are, for now, bullish. So we'll see how that plays out. And then if we go back down to the options table, 51% of puts were closed out today, which could mean something, but there's still all of these positions still open. There has been over the past 10 days, over the past 5 days, and even today, there's been an increase in selling calls. a lot of 22% of bought puts of bought calls were closed out today. So, if we go back to our indicators, I'll just show you how it looks, especially on LDPM as well. I don't think I could turn really bearish unless the 1 week LDPM crosses below the 2 week LDPM. And, we can just move back in time to see how that looks. This would be an example of that. So right here, the orange is the 1 week, the yellow is the 2 week, stronger, bigger level. And I mean, as you guys can see, like when the 1 week when the 1 week is below the 2 week, that leads to bearish price action. When the highest time frame is on the top, then the second highest time frame, then the third to highest time frame. This is the daily. This is the fourth highest time frame, the 4 hour, and then the 1 hour. When the LDPMs are stacked like this, it's really bearish. But when they're stacked like this, 1 week, 2 week at the bottom, then 1 week, then daily, then 4 hour, then 1 hour, that's actually bullish. And you can see this really nice bullish price action. Price moved all the way from 20 to 27. So that's a huge move, especially in GME. I mean, the price range percentage-wise, 34% move. That's pretty significant from May 15th to June 15th in 1 month. So as long as the 1 week LDPM is on bottom, that gives some hope. But we really don't want to see the 4 hour and the daily LDPM cross below. That will it's just not a good look in terms of liquidity. For the triggers, the way that would look like would be if would be the 1 hour trigger crossing below the weekly trigger. Again, it's just really not a good look. I've tracked these patterns for a very long time, and I will say that once the hourly trigger, and especially if the daily trigger crosses below the weekly trigger, it's just not bullish. So the way I sit here right now is I'm willing to hedge my long position if need be. But otherwise, if price can get back above the hourly and the daily trigger, phenomenal. We could be back off and running again. If folks can move back into the inhibition zone, excellent. Could be off and running again. But if we start to see the hourly trigger crack below the weekly trigger, we start to see the daily trigger crack below the weekly trigger, we start to see 4 hour LDPM and daily LDPM and even 1 week LDPM crack below the 2 week LDPM, I'm just going to say it right now, like these are all bearish things. Like these are all things that I would be looking at in a stock if I was looking to short. Now, I'm not saying I'm shorting GME, but these signs that I'm giving over are signs that I would usually look for in a stock to short. So I don't think it's necessarily the end of the world right now. We still have 22.68 that's holding. So that's a solid plus. I'm going to bring back on the levels for a second. It might be a little, much, but these are all the GME levels. You can see that this trend line is still intact from the low on March 16th. So, again, I think I'm not a big fan of technical analysis at all. Most of you guys know that by now. But I would say it's pretty solid that GME has been putting in higher lows every single month. If this trend line cracks, I will say there's probably going to be some downside. I know below 2169, so let me just 2269, sorry. Let me just put that on here. This is per Gavin, by the way. Yeah, so below 2269, next level is really at 2138. So this level has been holding. It held here, it held 1, 2, 3, 4 times here, it held 3 times here. As long as this holds, I wouldn't be overly bearish at all. But if this level gets lost and there's like an hour or a 4 hour close below it, that's when we really have to start saying to ourselves, okay, the bullish idea might be wrong and this might be testing lower levels. Now, just because it's testing lower levels doesn't mean that the world is ending. It can test lower levels and then, slingshot higher. But I am not super bullish right now until and unless either we see the sold puts come in or I can see Voex trend move out of the inhibition zone. Again, could be I'm interpreting the data wrong and the snap graphs have it right. I can't tell you for sure, but I could tell you that getting above daily LDPM at 2317 would definitely be a big deal. And getting above the hourly trigger at 2305 would also be really nice. Getting above the daily trigger would be very nice. And getting the hourly trigger to cross above the daily trigger would more than likely mean a trip back up to here. So it's possible that, price resolves to the upside. All I'm saying is that it's time to be a little cautious here with VOX trend cracking into the stability zone, and we'll have updates every night. I mean, again, I'm not willing to take a call position until sold puts come in. So if you don't care where GME is on a daily basis, but you're looking to play calls when there's good opportunity, no problem. Next time there's sold puts, I can promise you I'll let you guys know. But for now, I guess I'm a little bit neutral, maybe slightly bearish, but I wouldn't really turn bearish unless 2268 is lost. If that is lost, I think it's time to seriously talk about 2138 being revisited. All right, I'm sorry if this sounded sad. It's frustrating as hell to me. I want everyone to win. I want price to go up. I have a lot of shares. It hurts when we bleed, to be honest. And it's especially frustrating when the entire market is making huge moves higher, and the only stock that I hold is not moving to the upside whatsoever. If anything, it's moving to the downside. So we'll wait to see how this continues to develop. But for now, I do sound a little defeated. I definitely feel a little bit defeated. And hey, maybe that's your bottom call. Maybe when I finally start giving up hope on, this nice move higher, maybe that's when it'll actually happen. But until we see sold puts, I'm not interested in taking any call positions. So I'll leave you guys with that.